Good day everyone, my name is Michael Florentiades, I'm the Chief Economist at xm.com and this is your European Open Briefing for Tuesday 5th of December. These are the key points you should know about that we will be going to at some detail. The US dollar is waiting for the Senate and the House to come up with a joint proposal that they will then submit to the President. The dollar has dropped back a bit versus the Japanese yen. The pound has been volatile. Its movement has been mainly driven by Brexit news flow. And the key news yesterday was that there was no deal between May and Juncker on the so-called prerequisites. The Aussie gained on strong retail sales and a neutral Reserve Bank of Australia statement. And for the day ahead we have UK services, Eurozone retail sales, US trade balance and ISM non-manufacturing, as well as New Zealand dairy prices, global dairy trade index. Now, as you can see, dollar's rally has stalled for now. I think more progress on taxes and more data is awaited. You see that dollar yen tried to go through 113, but it has failed. We are expecting slow progress towards crafting a joint bill that will be sent to President Donald Trump for signing. US yields are also not breaking out. What do I mean by that? Well, the 10-year yield is pretty much stuck around 235, 240. Yes, we have seen some gains on the short end on the 2-year, but we haven't seen this real momentum in yields, upward momentum that is going to also allow the dollar to power ahead with conviction. What are we looking for right now? We have non-farm payrolls on Friday, the big number of the week, and we also want to see what the Fed is going to say on December 13. Next week we're having another Fed rate hike most probably, but what's going to happen after that is the big question, of course. Here you can see the British pound, how it has been moving. Well, there has been a failure to clinch a deal. There was high expectations that the UK Prime Minister and the European Commission President would secure a deal, would manage to negotiate a deal, but we don't have a deal right now. It seems that the Irish border issue is a question. Northern Ireland, the border between Northern Ireland and the Republic of Ireland, and May's Democratic Unionist Party, they don't want such a special arrangement for Northern Ireland. They want it to be treated like the rest of the UK. And of course, DUP are sort of kingmakers right now because without their support, the government in the UK could collapse. So this is a tricky point to try to get a deal on that. However, I would note that yes, the pound has fallen, but the markets are staying relatively calm. They are probably expecting a resolution of this issue, so it seems that the markets are relatively optimistic. Of course, they have priced in the bad news, but we haven't seen a sharp sell-off in the pound, which would maybe signal that the negotiations are really in trouble. Finally, for today, the Aussie, it has rallied following strong retail sales. They were up 0.5% month-on-month for October versus 0.3% expected. We are also getting the third quarter GDP growth tomorrow. Now, with respect to the RBA, their statement struck me as the kind of not too hot, not too cold type of assessment. So they're saying that inflation is low, growth is around trend. Yes, they're worried about household leverage, but not panicking about it. So I mean, I think it's fairly balanced. And very importantly, they didn't say anything about the exchange rate being overvalued or being expensive. So that's something positive for the Aussie, will allow it maybe some further gains before the RBA calls it overvalued. And Chinese services PMI was also positive today. Now on to our calendar, we are seeing that market services PMI in the UK, we're expecting a small decline. Market composite Eurozone PMI, we are expecting it to be the same as the preliminary, the flash estimate. And we are also expecting a reversal of the previous month's gain for Eurozone retail sales, minus 0.7% versus 0.7% the previous month in September. That key dairy auction is taking place, should move the kiwi, which has been doing well today. There was optimism that interest rates in New Zealand are not going to drop further, so that provided some support for the kiwi, maybe on the back of dollar weakness as well. And finally, we will have US ISM non-manufacturing as well as trade balance out of the US. The US ISM non-manufacturing could point to a slowdown from the previous months, from October's quite high levels. That's it for me for today. Thank you very much for watching and have a great day.